February 9th, 2026. Let's go over the trades I took today and talk about the market. We're in the middle of a recovery in the market, as you can see from the momentum. We always look at the momentum on a daily chart just to get some reference of what's going on. We had a big sell-off, as you can see, the past 2 market weeks. And on the last market day, which was Friday of last week, we had a reversal. We had a big green day. Was it fake? Was it real? Well, we needed another day to find out. So today was that day, Monday, and the momentum continued the reversal in the buying upward direction. We had another green day all around the market. So that's where the momentum is going. Before the market even opened, did we have a hunch that we were going to have an upward move? Yes. We saw a tipping point. A tipping point happens when these peaks are reached on a daily momentum basis. So let's go over the trades we took today. The first trade I took was in TQQQ, and I did not use my traditional 1-minute chart or 2-minute charts. No, I actually am using my 5-minute chart. 30 for my context and my gate. The 30 gives me permission to take trades in whatever direction. I'll talk about that. And then we have a 2-hour chart for just a little bit more context. So let's go to market open, which is right here. Market open. On the 5-minute extended data, we're carrying upward momentum. On the 30-minute data, we are carrying upward momentum. And on the 2-hour chart, we are carrying upward momentum. So that is what's called a strong alignment. Right out of the, right as the market opens. If we look at the 5-minute regular hours and look at that MACD data, what do we see? Right as market is opening, we are not going up. We're in fact going down. So they're not aligned yet. This one's going up, 5-minute extended hours, 5-minute regular hours, going down. We need them to become aligned. So this one's going to keep going up. So when does this one start to go up? When do they align? Well, they align about right here. Now this one's starting to tick up. Now this one's in the green right here, but then it pulls back. Meanwhile, we're building momentum. This is the first, again, every candle is 5 minutes. This is the first 20, 25 minutes of the market. We usually wait about 30 minutes. Sometimes we wait a little bit longer for the price action and the levels to establish, and then we take our trades, which is exactly what I did today. I waited for them to align, and that happened right here on this yellow line. Anytime you see a yellow line, that's a trade that I took. Why? The 5-minute is now reversing to the upside. We're now reaching alignment. And what do we see? We see a particular kind of volume confluence. This volume confluence is what I call a 2x3. 3 volume bars. The last one is greater than the first one. 2 or more are aligned with our trade direction. So if we're trying to take long trades to the upside, we want those candles to be green. 2 out of 3. All 3 would be awesome, but 2 out of 3 minimum need to be green. And the opposite goes for going short. If we are going short, we want 3 candles. We want the last one to be greater than the first one. And we want 2 out of 3 of these minimum to be red because we're going short. So in this position right here, what happened? We got a 2x3. We got permission to take trades to the upside. So we entered the trade right here at this candle right here at the close of the candle. So our entry was right here at the close. Stop loss slightly below. That first target was hit. All of the targets were hit. It was a grand trade. The price never came back. These are the kind of trades that are very important. And they happen quite often. Maybe 30% of the time, 20% of the time, where you'll get a trade that will just go and go and go, and it'll hit all of the targets, and it's just wonderful. That makes up for the losses, because the losses are larger than the wins, and that's why you need a higher than 65% win rate for you to have a positive expectancy. I messed this up because I took profit at the first profit target, which is correct, that's good, but then I'm supposed to let the rest of my position keep going to see if we can get runners. And what did I do? I cut it short. I moved my stop loss to the break-even point. But if I would have kept my stop loss where it should have been, the stop loss would have been like right here. Had I kept my stop loss right there on this orange line, the price never would have came back to touch it. The price would have never activated that stop loss. It would have kept going, and I would have been able to capture a massive move. But I didn't, because I lacked the discipline to allow it to happen. One of the clues that I should have listened to is the fact that we're in a heavy alignment. The 2 hour is going up. The 30-minute is literally crossing over, about to go up. This is a heavy alignment. This is high probability stuff right here. And I didn't have the wherewithal to capture that. Next trade on the day. Next three trades on the day was Apple. The first one was right here. Why? Look at this wedge forming, first of all. You see this? This is so... Sometimes the market is so picture perfect. It's never perfect, which is why it is perfect. Right here, as this wedge is forming, I'm noticing that the 5-minute MACD is not going down. This is all going down. The 5-minute MACD is doing what? It's coiling. It's charging. It's building energy. It's building momentum. I like to think of it as a spring that's being compressed. And as soon as the MACD starts to give way and go with the heavy current is to the downside in Apple today. Look, down, down. At this point, right where I'm about to take this trade, that's this purple line right here. 30-minute is unbroken, no broken variance. This is just continuously expanding in the direction. And then look, right here, as it breaks, what do we see? A 2x3. 3 bars, last one greater than the first one. 2 out of 3 of them are aligned with the trade direction. That's why I hopped into this trade. Did it turn out to be a win? Let's see. We enter here at this candle, because that's aligned with the volume confluence. Enter at the close of the candle, stop loss slightly above. Price never touched the stop loss, and it hit all of the targets. Absolutely wonderful trade right there. The next trade I took in Apple was a loss. I took the trade because, what do we see? A 2x3. Ignore this this one right here. I'm gonna remove this line because this is just distracting. Here we go. Perfect. Now, what do you see? A 2x3. 3 volume bars. This one greater than the first one. 2 out of 3 are red. The 30-minute is pulling to the upside though. So this is a warning, a big warning. It says be careful. You want this to be expanding in the direction, or you want it to be holding some sort of levels, but this is not holding a level at all. It's actually increasing, going against the direction of the trade. So what do? We scale down, and we just scale down and realize the chances, the probability is not as good as if this was expanding. So we entered here at the close of the candle, stop loss right above it. The next candle hit the stop loss immediately, and we were taken out of the trade at a small loss. Now my intuition was telling me to take this one right here. This was the right entry because we're on the right side of the momentum, and we also have a 2x3. It's a small 2x3, but it is a 2x3. 1, 2, 3. Last one greater than the first. So anyway, had I entered at this candle right here, this previous one, this actually would have been a win. So that was a lesson for today. Big lesson right there. Would have been a win. Last trade in Apple of the day was the final 10 minutes. You know I love to trade the final 10 minutes of the day because it's always very exciting and predictable. If you actually study the market, you'll see what I mean. The last 10 minutes are always predictable because that's when the algorithms turn on. And if there's already a setup in place, which look at our setup, we're building momentum to the upside. Look at this. We're building momentum. We're back to the 1-minute chart because we're looking at the final 10 minutes. We're building momentum to the upside, aligning with this 30. The 5-minute at this point is basically holding upward momentum. Look at this. As we're coming into this, our momentum is holding. We're in the green. We're holding this right here. We're not here yet. We're looking right before our entry. Our momentum has started building in our direction. This is why we took the trade. This MACD on the 30 going up. MACD on the 5 in the green and going up. So by the time this candle occurs, which was my entry, by the time this candle occurs, I knew that we had many things in our favor. So I entered because this was the beginning of the last 10 minutes of the day. The algorithms turned on. We get a huge green volume bar. So I entered the trade right here at the close of the candle, put my stop loss slightly below, and then we did take profit right here. Right here, we didn't get to reach the full level. We were running out of time. There's only 5 minutes left in the market at this point. So we did get pretty high up there, and I decided to take profit there instead of just waiting for the market to run out of time. So we secured some profit there. Last 2 trades of the day were in NQ futures overnight. I took NQ future trades overnight because there were 2 setups that follow my rules, so I took the trade. But the first one was a mistake because I entered a little bit too late. And what do I mean by that? Here's the first one I took, this yellow line right here. So, this is a short trade. Why? Because our momentum is going to the downside. The histogram on the 2 hour tapering down. We got alignment there. What do we see here? Power volume bar greater than the previous 3. It's also a 2x3. And we're crossing over on the 5-minute chart right now. We just had this wall of resistance, this big wall of resistance here, tapering this trend line. We bounced off of it. This looked great to me, honestly, looked great to me. However, wasn't meant to be. Next candle stopped me out. That was a loss. Then a little bit later, right here, we have the same thing occurring. We got a 2x3, 3 candles, last one greater than the first one, 2 out of 3 are red. We're on the right side of the momentum, so I took that trade right here. Entry at the close of the candle, stop loss slightly above. That first target was hit, second target is being hit right now. So that was all the trades I took for today. I will see you in the next one. Take care now.